Good morning, traders. This is Michael coming to you from GammaEdge on Tuesday, April 15th with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model, which we've annotated up with some arrows to understand the trend of the overall market. This market trend model, or MTM that we like to call it, is based on the tick index. Basically, it is just a reference of buying versus selling. It's an industry standard. You can research it at your favorite investing website. But again, all it is telling us is who is in control, buyers versus sellers. Now, as we've seen, the bolded CT, which is our instantaneous cumulative CT intraday right here that we watch intraday for buying versus selling and who is winning the battle, continues to improve. We've drawn the arrow here. Obviously, we're lower left to upper right. The bolded CT did cross below these moving averages here around 2 o'clock on the 11th. So we turned a little bit more bullish on the market trend model, and it's maintained at least above the moving averages, and they've stacked in the proper direction. Draw your attention up here to our breadth indicator. This is basically just new lows versus new highs. It's actually been narrowing the spread there, and new lows versus new highs has pretty much been flat for the past few days compared to the previous days when we saw significant selling in the market, and new lows were outpacing new highs. So more stocks were being sold than accumulated. Our cyan indicator here is our filtered cumulative tick. This is filtered out per large transactions, plus 1,000, minus 1,000, basically block orders, which are institutional and large market players. As you've seen past 2 days here, it has improved and is stayed above the zero line, which indicates there are more larger block orders buying than versus selling. So again, we're still very cautious with this market trend model. It is improving, but we have a long way to go to get a large improvement in the overall trend. Obviously, we want to see this bolded CT here start crossing above this colored ribbon, which is our longer term buying versus selling indication, which continues in negative slope. So the bolded CT needs to cross above or into the moving averages and above. So start changing this red and cyan slope back to the upside, indicating we may be starting a new longer duration uptrend. But as of now, again, improving. Very kind of a weak, anemic buying in the overall market. But again, improvement. So we'll continue with that stance of improvement on the market trend model. Heading over to our SPXA, this is what we call the cruise ship. This is a larger institutional positioning and on out in time. Obviously, you see the monthly expiries here. Again, it is still put dominated within the overall structure. So we are coming right up to the transition point. This bolded, this outlined CT or outlined box is our transition point, indicating that if we do start moving into transition, we most likely could see more choppiness type action, but we are moving from a more negative state to a balanced or heading towards a positive state if you start moving through transition. Do note the transition is extremely wide, and what we continue to see within the overall structure obviously is in heightened volatility and extreme large outsized moves within the overall structure. So again, continued with that overall indication that we could have larger moves still on the horizon. But in the 5,400, obviously very important key level if we can start to get in the transition of this larger SPXA expiry. Noting we do have monthly OPEX on the horizon also. So this structure could change after a monthly OPEX here. So heading into the SPXP, all expiries turned on again here. So we are still put dominated within the overall structure. Expected move has improved slightly. Obviously, we're down to 1.65, where we're seeing 3 and 4% expected move. So 100 to 200 point daily ranges. So we're dropping that back under 100 and maybe back into the 30 to 50 point daily range. So that could be coming back down to a little bit more normal. So we'll draw your attention to these boxes that we've labeled here. Basically, this is indicating in areas where the structure needs to improve. Obviously, this red would be an indication that we need to improve this structure if we want to see any price appreciation. So what this is basically telling us is we have significant in-the-money puts overhead These are negative net deltas and will be difficult for a significant or a large price appreciation to push through and up through this box unless we see a change in market structure or sentiment via closing these in the money puts above us and then opening out of the money calls, which would be above spot price, changing these red negative net deltas to green. Over here, the net OI, we are seeing improvement in the overall structure. As you can see, we are green net OI here, indicating that we are having some call speculation come in out of the money call speculation, improving the net OI, but we still have a significant amount of in the money puts overhead that need to get some sort of resolution via expiry or manual closing of those. Below us, we do see the structure continuing to improve. That's why we've drawn this green line. You'll notice that the net delta below us has changed from a largely red structure. If you scroll back 2 or 3 days for our newsletters or anything we've posted, to a green and red structure, so it is indicating improving. Most likely this is just from puts closing below us, exposing these calls that can become supportive, or these green negative net deltas. So we'll reference those downside areas as supportive as long as spot price stays above it, unless we see this structure start changing to all red negative net delta, indicating that out of the money put speculation is coming in and overriding any of the call speculation that we've had improvement. So for a significant change in the market structure and trend, we went over this previously and we've posted videos about this. We have to have out of the money call speculation start filling in this red negative net delta. That's either closing of those puts and opening of out of the money calls, or at least closing of some of these puts above us, exposing the in the money calls. The manually closing of the puts can only drive price speculation so far. You have to have that opening of that positive delta out of the money speculation to continue to drive price appreciation higher. So we'll reference our transition area. We are right at the top of the transition pre-market. So again, noting that if we're within transition, this can be extremely choppy. We have the DEX transition outline as well as the GEX transition via the white boxes. Noting 54.25 overhead is PGEX, that's positive GEX. So if we do transverse above the transition and positive GEX, we move into a more positive gamma put dominated territory, positive gamma call dominated territory, which could lead to further price appreciation up towards 54.50 and 54.75. Staying in the transition or below transition, we would give the edge a little bit to the weaker or to the bears, and that could lead to a little bit more price depreciation, or just not a significant price appreciation and price being trapped under transition and staying within this overall low level structure. Moving on to the SPX P0DTE expiry for today. Again, call dominated, so this is improved as denoted by this area below spot price. These are in the money calls below us. These can be supportive and like a sponge if spot price stays above transition here. So again, transition is a very important level that we discuss in depth and intimately here at GammaEdge multiple times. Again, below transition would indicate a little bit more weakness, indicating we move into a little bit more negative gamma put dominated area. Staying above transition indicates we are staying in a little bit more positive gamma call dominated area, and then we could have price appreciation up towards this 54.25, 54.50, and then up towards 54.70. Again, denoting that we have in the money puts above us. This will put a cap on price appreciation unless we watch our vol M, which is our intraday volume command of where market participants are speculating via volume of options. And we continue to watch that intraday to give us an indication of directionality and where market participants may be speculating. Yellow box is what we call our drunken sailor range. This is just a large, wide range where we could have price discovery within this overall range. Again, denoting that it's 5,300 to 54.65. So again, large outside is expected move, and that just tells us that we're still not within a completely repaired option structure that gives us a good area or edge to trade against. So if we're in the drunken sailor range, we definitely could have significant amount of price choppiness. So takeaway key here is we need to stay above transition, indicated here 53.90 to 53.95. We need to see out of the money call speculation if you're a bull to see price appreciation to the upside. Just also denoting that we're within what we call our overall drunken sailor range, and we could have choppiness and volatility. Moving on to the SPX delta balance, this is basically just telling us what is happening above and below spot price with market speculators. Key takeaway here is delta balance, our blue line is above zero, indicating we are leaning a little bit more call dominated, as obviously you've seen in those previous slides. The red structure here is your left-hand plane. That is what is below spot price. Obviously, we've seen that improve, as I just discussed, to more call dominated and less put dominated. So that drives us below the zero line here on this chart, but without the repair of the right-hand plane, which is this green dotted line moving back above zero. As we've indicated, we aren't having the significant call speculation to the upside that we'd like to see for a sustained price appreciation and a large price movement in the overall market. So this projection on out in time is what you see here. So indicating that into OPEX, we do see some sort of improvement, but then we see dropping of the delta balance, which indicating short dated call gamma is leaving the overall complex, and then dropping of the right-hand plane indicating the same. That out of the money call speculation may be projected to drop on out in time to OPEX, as well as the overall left-hand plane below spot price indicating that those calls could be leaving the complex also. So this may be a slightly weaker state into OPEX. We'll continue to monitor this, but then we do see a price appreciation improvement after OPEX into next week. So again, this could change day over day, but this is what we're looking at with the data we have at hand this morning. SPX P net stack command, this basically just tells us where our highest sensitivity levels are for the day. So we encourage you to mark these levels down. Obviously 5,300 in the money calls below us can be supportive if we move down towards that level, and then 5,500 in the money puts above us. Obviously these strikes are continually very wide, indicating the structure is still highly volatile and out of balance for the moment. But then we also have these closer strikes to us, 5380, 5395, and 5380 for Charm, Gamma, and Vanna for the third order Greeks there. But also just referencing that net delta is that overriding Greek first order that will basically swamp all the other Greeks if we do see mechanically opening and closing of call or put contracts to the upside. Watching 5450, 5425, and 5450 on the Charm, Gamma, and Vanna levels. I think we outlined those pretty well to the upside via our web app. As well as the structure of transition and drunken sailor range that we were referencing. So let's move on to our trading view chart for this morning. Again, referencing 5,400, we've discussed that. That's a key important level that we need to stay above. Transition there at 5380, 5390 if the bulls want to have any chance to move to the upside. We're testing on the full complex P-trans plus GEX and zero GEX to the upside. Again, make sure that we are indicating these key levels to the upside, and that we want to make sure that we watch these levels intraday, those key high sensitivity levels that we may have price appreciation above or get rejected, and price depreciation back down towards that 5,400, and then the lower level 5,380, 5,390 transition area that will be key to stay above. So heading into today, basically my thesis is 5,400 key level need to stay above, transition area need to stay above. Also, if we get above this 5410, I would look for 5425, 5430 to the upside in the overall structure, and then we'll see how vol M is looking to see if market participants are speculating to the upside via out of the money calls via our call centroid, and watching our put centroid intraday. So hopefully that helps with that. Everybody have a great day, and we'll see you in the Discord in just a few minutes. Thanks.